Hi, welcome back. Today we are discussing about cumulative delta divergence. How to trade with the cumulative delta divergence. And we have two examples today. The one is ETH USDT. As of last Friday, there is a cumulative delta divergence happened here. And the other one is Nifty 25,000 put option. And we got a strong reversal after this delta divergence, right? So we will discuss about this ETH first. See, look at this candle. This candle is a delta divergence candle. This candle is green, but the delta is red here. Correct? Delta is red. And what I am going to do is I am going to draw a line here. Okay. And here also. This opposite reaction will come. And the next candle, you look at the next candle. Here, what has happened? Price moved up. Delta also moved up. Cumulative delta also moved up. There is no divergence here. But next candle also same. But look at this candle. It has closed exactly above this divergence candle. And cumulative delta is lower than this point. And here also the same thing happened. And look at this price candle. Here, the price has closed above this divergence candle, and here the cumulative delta is closed lower. So if we draw a line from here to here, it is moved upwards, and here it is downwards. So there is a divergence happened from here to here. Then how to trade with this divergence? That is the question. So what we have to do is we will draw a line covering the divergence candle's body like this. And here, here. The next step is a candle should close below the body of this candle with some selling in that candle, red candle. A red candle should close over this body. And see the next candle closed lower to this, and after that a big downfall happened from where 46.11 to, see, it has gone down sharply. So this is the importance of delta cumulative delta divergence candle. The only thing is we need to draw the divergence or find out the divergence levels, or with a single candle also you can do like this, but that should appear in an important position. The day's divergence, everything we have to study. And come to here, this put option, this here we are going to take a good reversal trade. How to take this reversal trade with a delta divergence? See this red candle having delta red, negative delta here also, no divergence. And see this green candle. This green candle is having negative delta. So it is a divergence candle. See the first divergence candle. No? So I am drawing a line on the close price of the candle. And the next candle, the price moved up, but divergence delta, cumulative delta has closed down. So I will draw a line here also. So here price moved up, cumulative delta divergence, delta moved down. And here also same thing happened. So what we have to do is, we have three delta divergence candles in a row. So we will draw a rectangle covering the body of all the three candles. Correct? And we need a breakout. If it is with increased volume and satisfy some other conditions, it is very good. So where we got a breakout, no candle from here to here, no candle closed above this rectangle, correct? The body of the delta divergence candles. And this is the candle which closed above with a increased volume and a good amount of short covering also there. So there is no doubt that there will be a short covering rally ahead. Okay, so we will buy from here at around 130, and within 30 minutes it moved up to 187. Some 57 points has been moved up. And that is what delta divergence or cumulative delta divergence also you can take. The same thing. You have to draw. This is very important. And you need to draw the rectangles. And we need a breakout like this or a breakdown like this. Where is ETH? Here. Here we go short, and in this case, we will take a long position. And this is applicable to all financial instruments. In equities also, it is applicable. You see this M&M chart, day chart. See, and we got two delta divergence candle continuously. Correct. So if we draw a rectangle on that, and this day the breakout happened, and after that what happened? It has gone up to 34.28. From where? From 30 to 79. Some 130, 150 points gone up within one day. Some 3, 4, 5% return. So this is what a delta divergence or cumulative delta divergence. And we need to study this accurately, and we have to practice it. Then only we will get the result. Okay. So that's all for today. And I will come up with a delta divergence strategy once again with the good examples and all, with live examples. And these are all live examples. This put option is a live example. Okay. And after that, see these candles never broke down this level. See, still holding this level. That is the beauty of this delta divergence. Even still, the put option is holding this level. Correct? That's all for now. I will come up with good videos very soon. So subscribe our channel. If more subscribers are there, I will come up with a very, very good videos. Okay. Thank you very much.